Hello, everyone. This is Senator Jim Runestad. Welcome to today's virtual tour on how to appeal your property taxes. Thank you for joining us. I can tell you that we had way more RSVPs than we had ever imagined when we first put this together. And even though we can't do this in person, I'm very excited at the turnout. Property taxes is not the most headline grabbing story out there, but I and many others think that it is a very important topic. Our communities are continuing to grow, and especially for new home buyers, the chance to make sure you're not overpaying on your property tax can mean saving thousands of dollars a year. Most people don't even know they can appeal their property taxes, or if they do, they think the process is too intimidating. So hopefully today we can change that, and hopefully everyone gets a lot out of this. Before I introduce our experts on the call, I do want to mention that my office provides information on a how to appeal your property tax guide. You can find it at www.senatorjimrunstad.com/publications, or just contact my office and we'll mail you a paper version at no cost. I'll also mention that if there's anything that we can ever do out of our office, not just property tax, but any state matter at all, don't hesitate to contact us. So today I'm joined by two of Oakland County's experts on state property taxes, and they happen to be right here in southeastern Oakland County. These two know the ins and the outs of the process as well as anyone. So I hope you'll find their presentation helpful. I know I will. In a moment, I'll turn it over to them and we'll have some time at the end for some question and answer. If you do have a question that you'd like to ask, you can email it to my office right now, and I'm going to spell it senjrunestad@senate.michigan.gov. We've already had quite a few questions submitted, but we'll do our best to get through as many as possible. However, if you didn't get your question answered, my staff is going to get back with you and get those questions to our experts so you will get your questions answered. With that, I'd like to introduce our experts today. Michael Lohmeier is the assessor for the city of Novi. His professional valuation and property tax experience spans over 20 years. His expertise includes the areas of valuation, property taxes, tax law, exemptions, and public administration, and more. In the past, he has been appointed by the governor to serve as a tribunal member of Michigan's highest tax court and Michigan's Tax Tribunal. Michael is also known as one of the best, if not the best, assessors in the state of Michigan, and we're very happy to have him here today. Michael, thank you for taking time out of your busy schedule to join us and help answer these questions. We also have Dan Tehan, who's an accomplished realtor at Hall & Hunter Realtors with over 25 years of experience. Dan is Oakland County's leading property tax advisor and advocate and is a top expert in property tax appeals. Over the years, Dan has helped scores of clients save hundreds and often thousands of dollars on their property tax assessments. Dan is here today to share some of his tips and experience in the appeals process, and I am thrilled that he's been able to join us and offer his expertise. Dan, thank you so much for being here. And with that, we're going to go ahead and get started, and I'm going to turn it over to Michael.
Thank you, Senator Runestad. I appreciate being invited today to share with those registered the information about assessment practices. It's really an important information that we have to provide with them today, especially this time of year. Assessment notices are going out. Some people have already received their assessment notices. Some people are living in some challenging times right now. And I think this year and next year, I think it's important for some people to really have the information that you're providing. So I think I really appreciate you taking the time today for us to get this information across and also be able to provide them with an opportunity to have this information to give them the answer to some of these questions. What I want to do is really just take time to provide the foundation of what assessing is, what some of these terminologies are, and the information of how to understand what property taxes is and what they're based on. And then I'm going to turn it over to Mr. Tehan so he can provide more of an in-depth approach to the valuation aspects of the property valuation part of it. So on your screen, I want to give you a little bit of information about the assessment cycle and the primary dates that really taxpayers should be aware of. As you get your assessment notice, and if you have them already, if it's come in the mail to you, many of you are from the Novi area or some of the surrounding areas. Some of you have received your notices. Those values representing the 2021 assessments are based on a tax day of December 31, 2020. That's an important date. That's the effective date of value for your property. That's the way your property physically exists as of December 31, 2020. So if your property was 50% constructed as of December 31, 2020, that's what that value represents. That's an important date to remember if you do decide to come to the March quarter review, because that's what you're physically taxed on. In February is an important time period as well, because that's when you do receive your assessment notices every year. And as I mentioned, a lot of you, if you haven't received your assessment notice yet, you will be within the next week. If you haven't received it, you can either contact your local assessor. I'm the city assessor with the city of Novi. All of our information for the 2021 tentative assessment valuation information is available online. And many of the Oakland County assessors do have their information available online. In March, that's an important time period for assessors. That's kind of our Olympics for property taxation, because that's when the March quarter review meets. They meet primarily, the big emphasis for March quarter review is to hear valuation related appeals. Primarily the valuation related property cases that they hear are residential in nature. There are some other things that they hear. Classification of property appeals come to the March quarter review. And when I talk about classification, that means residential class or commercial or industrial class. They also hear poverty applications, and I'll talk a little bit about that with you tonight. They also talk about disabled veteran exemption applications. I'll talk a little bit about July and December border review, but March border review is the thing that we're going to focus on with you this evening, because that's coming up pretty soon. And I'm going to give you some dates for that, and that is on your assessment notice. It's on your assessment notice. It's on most of your assessors' websites. For the most part, like City of Novi, that's going to be held on the 8th, 9th, and 10th of March. But I would advise you to contact your local assessor and find out specifically when those dates and times are, and see when those appointments are being made. Many of the assessors in the local area are doing those virtually this year. Some are doing them in person, some are doing them by telephone contact, but I would contact them and see when appointments are necessary, because the pandemic this year has made things a little bit challenging, because more time has to be made available for social distancing and cleaning. So appointments have been, even for physical appearances, things have had to be expanded for time periods in between those physical appointment time periods. The next date that's important is for the non-residential property owners, is May 31st. That's the last date that a non-residential property would be appealed to the Michigan Tax Tribunal. As Senator Runestad had made a note of earlier, I had been appointed by one of our governors to the Michigan Tax Tribunal. That's our state's highest tax court. That's the highest tax arbiter in the state. The next adjudicator would be the Michigan Court of Appeals. They have exclusive jurisdiction over all appeals of property tax and valuation matters in the state of Michigan. If it's a commercial or industrial parcel of real estate and they have a valuation appeal, they can appeal. They don't have to come to the March Board review. They can appeal directly to that Michigan Tax Tribunal, so long as they appeal by May 31st to the Michigan Tax Tribunal. Some of them still come to the March Board review, especially if it's a pretty simple case that the March Board review members can get their arms around. Residential property owners still must protest first to the March Board review in order to appeal to to Michigan Tax Tribunal. So when you get that assessment notice in February, sometimes there's not a lot of time to gather enough evidence to come to the March Quarter Review to really state your case. Or in times like today, maybe you don't feel comfortable coming to the March Quarter Review, or maybe you're out of town. In that case, you can appeal by writing and serve the March Quarter Review with what's called, or what we refer to as a protective letter of appeal. Just make sure you fill out that petition and get an original signature on that petition and make your claim that you're appealing the assessed value and taxable value of your property. Make sure you get that in the hands by that due date and get that into the board review and get it stamped. And I would make sure you get a receipt back that it was timely and properly filed with that local community, because that ensures that you've met the local requirement so that by July 31st, you can appeal to the Michigan Tax Tribunal. You've met that local requirement, so that ensures that you preserved your right to appeal by July 31st. That buys you some time later that if you do decide that you are over-assessed, that you can still file with the Michigan Tax Tribunal for your residential appeal. One thing I want to make clear to you is that once that assessment notice goes out, our assessment role is prepared. The local assessor can't change that assessment role, even if you were to come in and we were to find an error with that role. If your square footage is incorrect, if the bathroom count is incorrect, if the basement is finished and it shouldn't be finished, the local assessor has no more jurisdiction over that role for that year. It has to go through a different local authority. It either has to go through the March Quarter Review for correction, like through a July or December Board Review, and we have to get an order from them to change that assessment. It has to go to the State Tax Commission, or if it's a valuation issue, it's got to go through the Board of Review, or it's got to go through the Michigan Tax Tribunal. Once that role is done for the current year, we can't change it. It has to be from a different authority. So that's why it's important that you invoke a jurisdiction that something can be changed. But once you file something with the Board of Review, that allows us to keep talking about that issue. So even if you get a letter of appeal with that petition into that March Board of Review, and let's say you're out of town, you can still engage in conversations with your assessor, let's say when you get back in town, or when you have more time to gather evidence about sales information in the area, to meet with your assessor and talk to the assessor about that property. And I'm going to talk to you more about information you can gather, and so is Dan. I'm going to talk to you more about your record plan. Other information about the assessment cycle, spring, summer, and fall is when we do most of we do a lot of stuff other than valuation information. We work on lot splits, combinations, special assessment roles, but primarily the late spring, summer, and fall is when we're doing a lot of the field work for data collection. So that's a good time too, that if you want us to come out and do an inspection on your property and check records for accuracy, that's a good time to have us come out and look at your property to ensure that the information is correct. And then of course, December 31, 2021 is when the tax day would be for next year, for the 2022 assessment. Some basic terminology you should understand while you're reading that assessment notice is that true cash value is really synonymous with fair market value here in Michigan. And that means the usual selling price of the property. That's what we're trying to develop as of tax day. When we're talking about December 31, 2020, we're trying to do is develop what is the market value on the property. And I put on here that an individual sale price may or may not reflect market value of the property, depending on the conditions of the sale. It may not be an arm's length sale. There may be duress on the part of the buyer or the seller. Just like when you buy a property and you go through a bank for financing purposes, they're going to send out their own appraiser to develop their own opinion of value. They're not going to just say that the sale price paid is dispositive of the market value of the property. We can't either as assessors. We have to look at other sales in the neighborhood to develop an opinion on what that property is worth. So we have to come up with what we think that property's true cash value is based on sales in the area. And assessed value would be representative of 50% of that true cash value. State equalized value, after we develop assessed value on that property, It still goes through county equalization and state equalization processes, and then a factor is applied. If a factor of 1 is applied, then state equalized value and assessed value are the same. And City of Novi assessed values, like many other communities in Oakland County, they have been the same. Like, I can't remember any of the values in this surrounding area ever being factored. So that's why on your assessment notice you receive out of the communities around this area, the assessed value and the state equalized value, one on the assessment notices are given a tentative factor of 1.0, but you probably, if you've lived here a long time, you've probably not seen a factor of anything other than a 1, because we've done our jobs pretty qualitatively well, so that there hasn't been anything other than a 1 provided, because the county equalization process and state equalization processes haven't given us anything other than. So their state equalized values and assessed values are not really synonymous with each other, but in all intents and purposes, they have historically been the same. Capped value is merely a calculation, and this came about because of Proposal A. Back when Proposal A came about, prior to Proposal A, we paid our taxes in Michigan based on assessed value. The millage rate was applied to the assessed value of the property. But after Proposal A, we came up with some new terminology, and one of it was taxable value. And what that was a benefit to the owner, that the longer you owned a home, they came up with this cap value formula that said, as assessed value may go up 4, 5, 6, 7, 8% some years, they would cap that taxable value at the rate of inflation unless you did some changes physically to your property. So this cap value would be calculated every year. And this is almost synonymous with a pocketbook effect that we talked about, because this is how your taxes are figured out every year. And it's just a calculation. So you have this equation that reads, if you take your previous year taxable value minus any physical losses to your property times the inflation rate multiplier plus any physical additions to your property, that is the cap value. And that would be a number. So last year's taxable value minus any losses on your property times the inflation rate multiplier plus any additions becomes this cap value. You compare that cap value that's calculated to your SEV for the new year, whatever is less becomes your taxable value for the new year. So the longer you hold on to a property, if your SEV outpaces the inflation rate and you make no changes to your property, you're going to start seeing a spread or a cushion between your assessed value and your taxable value. And in times of higher appreciation rates in your neighborhood, you'll start seeing a bigger cushion between taxable value and assessed value. And we'll talk a little bit more about that. And again, taxes are calculated on taxable value. So your millage rate, a mill is $1 divided by 1,000. To figure out your taxes, it's simply just the millage rate divided by 1,000 times taxable value. So if you wanted to know what your taxes are going to be, it would be just your taxable value times whatever your total millage rate is for the year divided by 1,000. That's going to be what your estimated taxes are for the year. And then the consumer price index, which is what your inflation rate multiplier is for each year, is given to us by the state of Michigan, and everybody gets the same inflation rate multiplier every year. It's determined by the U.S. Bureau of Labor Statistics. So this year, for 2021, our consumer price index was 1.4%. So the inflation rate multiplier applied by your taxable value from last year is 1.014. So if you didn't make any physical changes to your property, it would be last year's taxable value times 1.014. And I'm going to show you that on your assessment notes. I have a blank assessment notice I'm going to get to in a minute. So what is fair market value? Very simply, fair market value is just simply the most probable price that would be paid between a willing buyer and a willing seller. It's just simply what would a willing buyer what would a willing buyer pay a willing seller? Not the highest price, not the lowest price, but what would be the most probable price or the usual selling price? So when you talk, if you do come to the March quarter review, that's the kind of information that you would want to bring as far as listings or sales to persuade the board of review members of what your property is worth. And that's really the test of reasonableness when we're looking at our assessments, when we're putting together the 2021 assessment roll, is are these values what we think would represent the usual selling price of those properties? Have we really taken into consideration all the market influences that really make this representative of the most probable price, what a willing buyer and a willing seller would exchange this property for? This is what your assessment notice would look like that you're going to receive by the assessor. They may use a little bit older version of the assessment notice, but it contains all this simple and similar information. And I've kind of blown it up for you on this next slide. The most relevant information I want you to look for is it'll have your parcel ID number on there. It'll have whether, if it's a residential property, it'll have whether you have a principal residence exemption or not, and what that percentage is. If this is your principal residence, it should list that you have 100% principal residence exemption on it. If it does not, then you need to contact the assessor and find out why not. Because if you don't have a 100% principal residence exemption, then it may be because you didn't file your application with the community. If this is your primary residence that you own and occupy, then you're missing out on what could be up to 18 mils of an exemption. And on a $100,000 taxable value, that could be an extra $1,800 that you could be saving. And I bring this up every single year when I go speak to homeowners, because that's a significant savings over time. And it could be one that you didn't file it and you thought you filed it. It could be that you bought a house and you thought that the closing agent was going to file it. It could be that you stuck it in the mail and you thought the mail was going to get here and it didn't get here. Or it could be our mistake. And it just got, we've got over 20,000 parcels. Things happen. We can correct those things at a July and December board review, but we can't correct it unless you bring it to our attention. And in cases of PREs, we can go back in time, but we can only go back so far in time to correct these things. So I always tell homeowners, double check to make sure you're getting your full principal residence exemption. Check that. And also on your assessment notice, it gives you what the taxable value was for 2020 and a comparison to what it is for 2021, the current year, and what the change is. Again, I just gave you the CAT value formula. And remember, it can never be higher than assessed value. The next line gives you what last year's assessed value was, and it gives you the current assessed value. Your taxable value can never be higher than assessed value. It can be the same. For example, when you buy a new home, it's uncapped to the assessed value amount. It can never be higher. Things happen in computer systems. Double check that it's not higher. I just gave you the cap value formula. If you've made no physical changes to your property, you haven't removed anything physically, like you haven't taken off any decks, you haven't removed a garage, and you haven't added any decks, you haven't finished a basement, you haven't added a garage or additions, then your last year's taxable value should have only increased this year by 1.4%. Because that cap value formula should have zeros in for losses and additions. Because the losses would mean that something was removed, and additions would mean something was added. Because that means value was lost for losses, value was added for addition. That's why I call this the pocketbook effect. At a minimum, you should be checking PRE percentages and pocketbook effects on taxable value. If you have something else in the 2021 category other than an increase for the 1.4%, I'm not saying that it's wrong, but this would be a red flag to call the assessor and say, why is it different than 1.4% increase? Why did it go up more than the 1.014 multiplier? Now, maybe the assessor's got a reason and they say, you know, we didn't know you had a basement furnace. And we found out and we put it on, and that's what the addition is for. And we only put it on the current year, and you're telling yourself, well, it's been there for 3 years. I'm glad you didn't go back, 2 years for it. But find out what that's for. Maybe there's a mistake, and maybe that addition shouldn't be there. Ask the question. Because again, if you know there's been no losses or additions, why is it not just the 1.4% increase? On the bottom here, I kind of cut it off, but it does have March Board Review appeal information. And on that same assessment notice, it will give you the dates for your March Board Review. And the reason I cut that off is I just want to emphasize to you that depending on where you live, your March Board Review dates may meet differently than other communities. In Novi, we have an organizational meeting that meets on March 2nd, but that's not when appeals are heard. Our board gets together for about an hour like other boards. They pick a chairman, they figure out when the other meetings are, they approve their minutes from the last meeting, and that's it. The appeals start and end on the 8th, 9th, and 10th. Every board review will meet at least 12 hours per session. Some of them go beyond the 12 hours. And they will all have an evening meeting lasting no less than 3 hours, starting at 6 p.m. So there's always an evening meeting. Now, again, some boards of review are doing it virtually this year. Many of them are doing it virtually because their community is not open to meet in person. Some of them are still have been closed off to the public ever since last April or March. You need to contact your local assessor and find out how they're doing board review. And there's nothing wrong with doing right in appeals. Just make sure you get your petition in, you got your original signature, you got your evidence in hand. And I personally would get something in writing that they received it timely and properly to ensure I get my rights for further appeal to the Michigan Tax Tribunal in case I don't like the decision back from the board of review. I have a couple examples in here, again, to kind of clarify more about what happens with taxable value. These are just common questions I usually get to help clarify assessment versus taxable value. So I wanted you to understand what these relationships are. For example, somebody just purchased a house is a common example. In this example, last year, you purchased a home valued at $280,000, and it has a $140,000 assessed value. So it's valued at $280,000 on the assessment roll. It has, which means 50% of that is an assessed value of $140,000. Its taxable value is $95,000. Well, how could that be? How come the taxable value is so low? Well, the prior owner probably owned it for a long period of time. So there's a cushion where taxable value has only been increasing by the consumer price index, and assessed value has been going up by the market appreciation in the neighborhood. So it's outpacing the taxable value increases. The assessor has a study of sales in the neighborhood, which shows the property has increased to a value now at $300,000. So it goes up $20,000. So the assessed value now for 2021 goes up to $150,000, which is half the $300,000, where last year was only worth $140,000. But because the sale occurred in 2020, it's going to remove the capped value. Because again, Proposal A started this idea of a capped value. So now that $95,000 capping, you don't get that inflation rate multiplier anymore benefit. It's going to uncap it to the SEV amount, which is now going to be the what? It's going to be now the SEV. So now the new owner gets a taxable value of 150 for 2020. Again, if I were buying a property, I wouldn't be looking at what somebody else's taxes were last year. I would be looking at the assessed value and thinking two things. What are my taxes going to be next year? And make sure I get that principal residence exemption turned in timely so I get the 18 mils off my taxes. The second example is a common question I get is, you made no changes to your property and both the SEV and taxable value increase. So last year, the home was valued at a true cash value of $260,000, which means half of that is an SEV of $130,000, and the taxable value is still at $95,000. A study of sales in this neighborhood shows the property has increased to a value of $270,000. So again, let's look at 2021 current year and prior year at 2020. The assessed value would now be $135,000, which is half the $270,000, and the prior year was $130,000. Now let's look at the cap value formula in place. $95,000 minus losses is 0, because they didn't tell us there were any losses, times the inflation rate multiplier, plus 0 is $96,330. That's what would become the new current taxable value for 2021. That's how that cap value works. The longer you own your home, that's what becomes the taxable value next year. You get the benefit of just being taxed on the increase in the inflation rate multiplier. And just for your own information, the inflation rate multiplier can never be, when you're looking at the cap value formula, it's either the inflation rate multiplier or 5%, whichever is less. So the inflation rate multiplier can never be higher than 5%. That's in the law. And we've never had to use 5%. The highest inflation rate multiplier we ever had was 4.4%. The average since 1994 has only been 2.4%. The lowest we had was negative 0.3%. So we had a negative one, but the average has averaged around 2.4%. So Proposal A has benefited a lot of people since 1990. The last example I have here is you made no changes to your property. The SEV decreases, but the taxable value increases. So they had a cushion with SEV up here. Taxable value increased. So they're in a declining market there, or for their neighborhood anyways. The assessment was reduced, but the taxable value still went up. So last year, the home was valued at $260,000, which means the assessed value was half of that at $130,000. The taxable value was only $100,000. A study of sales in the neighborhood showed the true cash value needed to decrease by $10,000. So the assessed value this year is only $125,000. Last year was $130,000. The cap value formula, again, we kept it a very simple example with no additions or losses. It went up to $101,400. So this is an example where the taxable value increased while assessment decreased. Now, I've got a note at the bottom of this. If the home had decreased to $200,000, so if it went down to $200,000, meaning its assessed value decreased to $100,000, then the SEV would have been lower than the cap value. Then the taxable value would have been the lesser of the two amounts, and they would have got the benefit of Proposal A, and the taxable value now would have been $100,000. So if you ever get the assessed value lower than the capped value formula, then the taxable value becomes the assessed value. That's important for you to know going into board review or going to the tax tribunal. Your assessed value might be up here. Your taxable value might be here. For your appeal to have a pocketbook effect, what I call, Michael Lohmeier calls it the pocketbook effect. for it to have a pocketbook effect on your efforts, your assessed value has to drop below taxable value to get that taxable value to reduce now to the new assessment. So if you want to have a principal argument, any reduction in assessment makes you feel good. You can feel good every time you get your assessment down. And you know what? I've got relatives, they like to appeal. And boy, it makes them feel good every time they get their assessment reduced. Doesn't have a pocketbook effect, but it makes them feel good. But you want to have a pocketbook effect and you want to pay for appraisals or do all this effort, get it below taxable value, then the taxable value will be reduced to the new assessment and it makes your bank account feel good. Now you can go on a vacation. Okay? Hopefully, again, hopefully that helps you understand the difference between the taxable value and the assessed value and when it actually affects your pocket. Mass appraisal, I want you to understand that what we do as assessors is similar but different than what private appraisers do. I have a long history of being a private appraiser. I started off in private appraisal. I have an MAI, SRA, other designations, certified general license, had my own appraisal office, worked for a large national accounting firm doing appraisal work all over the country. Our principles and procedures and paradigm of philosophies are the same, but the application of what we do is a bit different. And I wanted to really emphasize that. Private real estate appraisers value properties using singular approaches, using the three traditional methods. They'll look at a sales comparison approach where they look at one subject property and they'll compare it to maybe 3 or 4 different sales and they'll make adjustments. Or if it's an income property, they'll look at a subject property and they'll look at rentals and their cash flows and they'll capitalize. Or they'll look at a cost approach. But again, they'll look at land value and depreciated improvement value and they'll add it together. Assessors employ mass appraisal because we have to appraise a universe of properties. Like I have to appraise all the gas stations in the city of Novi using a cost basis. I have to appraise all of the apartments in Novi using an income approach basis, hotels on an income approach basis, or all the residential properties I will put in similar economic condition factor neighborhoods. Like I'll have one area of the city, one small area of the city where I'm looking at split levels, or one subdivision where I'm looking at ranches, and in the same subdivision, I'm looking at 2-story properties of the same age and size. Or in all of the city, I've got warehouses under 50,000 square feet and warehouses over 50,000 square feet. But what I'm saying is we put them in categories of similar type of style, size, market influencing characteristic properties, and we're appraising 20,000 properties as of one tax day every single year. So I can't appraise every single property by looking at 3 or 4 sales every single year that way. I have to use mass appraisal. So we might have the central tendency of these properties on a certain quality basis that are acceptable, but there are going to be some that are going to be overassessed and there's going to be some that are underassessed. So as assessors, we constantly are doing things like programs like today to try to get taxpayers involved to look at your record cards and see that they're accurate. Look at your sketches and see that they're accurate. Look at your valuation statement, see if they're accurate. We want people to get involved with the board of review to see if things are accurate. We want people to double check things. If you have appraisals, if you have sketches, we want that involvement because it's a checks and balance system. We use mass appraisal and we don't take criticism destructively but constructively because it's mass appraisal, it's not singular appraisal. We look at it differently and we know there's going to be mistakes made, even in the systems we use that are updated and changed over time. There's going to be things that are going to be in error. That's why we have July and December board review, and I'm going to talk about the fact that there are provisions in statute for things like clerical error because things happen. So I wanted to tell you the difference between what we do as assessors and what private appraisers do, because we're not private appraisers, even though we have similar textbooks and education and training to a degree like private appraisers. If you go on the City of Novi's YouTube page, you'll see that we also do videos on assessing practices, because we believe in trying to get education out to our taxpayers of what we do. And I don't think we're rare in that instance. I think other assessors do the same thing, just like Oakland County. Determining a property's worth. It's essential to quality valuation assessment practices that data used as accurate and sound valuation principles and methods are tested and followed, including recognizing each property as unique. And what we do, as I mentioned, we develop these neighborhoods based on their unique market value influencing characteristics. And I'm going to show you a valuation report, and we actually categorize like residential properties by ECF neighborhoods, just like we categorize commercial properties by not only their commercial classification, but their occupancy or use. Field data collection is extremely important, but again, we're going to talk a little bit about how we collect that data. And a lot of times we depend on property owners to volunteer information. Comparisons provide the basis for any adjustments for values. And assuming every property data is accurate, the adjustments to a neighborhood are based on sales, but what we're ultimately looking for is fair market value. Fair market value. Just like why Senator Runestad put this program together, what we're ultimately trying to accomplish is having an assessment role that is producing fair, true cash values for our taxpayers. Sales studies, there's two types of sales study periods that we use in a declining, and these are dictated by the state of Michigan. There's a 12-month sales study period, and this is for declining or markets that are in recessionary type periods. And that would be from October 1, 2019 through September 30th, 2020. And if you could probably tell from that latter part of time period, if those sales we're including is September 30th, 2020, that's getting us real close to tax day, which is December 31, 2020. So using that kind of a sales study period gets us right up to tax day. This 2021 assessment roll is based on a 2-year sales study, because we're in still what's called an increasing market time period. The state of Michigan has declared for 2021, all assessors are still using a 2-year sales study period. So the assessment roll this year for the communities around here are using sales that have occurred between April 1, 2018 through March 31, 2020. So our sales study period ended last March, almost a year ago before the board review. Now, if you go to the City of Novi website, you will see all the sales, residential sales. If you want to come to the March board review, for example, and other assessors do this too. If you want to come to our March board review and you want to look up sales for residential properties, you'll find sales between April 1, 2018 through March 31, 2020. But we recognize you'll be wanting sales also closer to December 31, 2020. So we've added sales all the way through December 31, 2020, not just for board review, but in case you want to go to the Michigan Tax Tribunal for residential appeals. That's why we also included that other period of time sales. That other 9 months, I know is important to taxpayers to appeal. So we went beyond March 31st for your convenience, and we've included those, and other assessors do the same thing. So we've given you those residential sales for our 2-year sales study, but for convenience, we've added the rest of the sales to the listing. And I've already talked about ECF neighborhoods. The one caveat I'll add is if you're comparing properties with your own, search for those that are having the same or similar market influence. And I think Dan's going to expand on that. Record card and sketch. There's three types of information. I strongly encourage you to get from your local assessor for your property, and double check to make sure they're accurate, because you're paying taxes, and taxes is a huge expense every year that you pay. A huge expense. So you should know what you're paying taxes on. You should know what you're paying taxes on. And they're your records. So get a copy of your record card, which shows a physical inventory of your property. Get a copy of your building sketch, which shows the measurements that make up the living area or the building area of your property, depending on whether it's residential or non-residential. And get a copy of your valuation report, which shows all the numbers that go into how your valuation is completed. Check it to see if there's any discrepancies in that information. See if there's any errors. If we're off by the measurements, or if you only have one fireplace, we have you down for 2 fireplaces, or if the basement's not finished and we have you down for a finished basement, or maybe it's 50% finished, we have you 80% finished. Get that information. It's available on our website. The sketch, the picture, the record card information. If you don't have internet, well, you're on Zoom, but maybe you're on somebody else's computer for this. But if you can't get it off of the website because you're having difficulty, if it's your property, email us and we'll email you the record card information. This is what a record card looks like. This is the front of the record card, and you can see at the bottom, it actually will give you a bit of information about the assessment history too. This is the back of the record card, and it gives you all the inventory of physical characteristic data, like basement area, basement finish, porches, decks, garage, the size. It does give you some breakdown of the cost data being used if it's a residential property, the cost data. We used to put the sketches here in the upper right-hand corner, but now we have Apex and we have a better sketch diagram, much bigger. That gives you a better description. This is just a simple sketch I gave you as an example. This is the valuation report. I did redact the parcel number and the address just for privacy purposes. But you can see that it gives you the land table, it gives you the ECF, it gives you the neighborhood, gives you the land value and the size of the property, gives you the square footage of the property, the year built, gives you the story type, the square footage, bathroom count, gives you whether it's water, sewer, gives you the built-ins, gives you how many fireplaces. Then again, it gives you the assessment history last year and this year of how it breaks out. And it gives you the ECF name. So I can tell you what ECF table it's on. Gives you a lot of great information. That's why I say get those 3 things: record card, building sketch, and valuation report. March board review. I'm just going to cover a couple more things and I'm going to turn it over to Dan. Your assessment notice provides the dates for your March board review, but I'd still contact your local assessor and see what's available. But again, I don't underscore sending in a write-in. Board review members give just as much attention to write-ins if you prepare those things well properly organized as they do in person or Zoom person meetings. March board reviews only consider current year information, not prior years. When the board review reduces a property's assessed value, it also considers any change that it may have on taxable value. You can appeal property classification, and classification is always based on current use. Classification has to deal with whether it's like real property residential, or real property industrial, or real property commercial. That's what I mean by classification. Like if you have a real property commercial property and you think it should be classified real property industrial, we do get those appeals still, because personal property is always based on what the real property is, and some people want to get certain exemptions for their personal property that's industrial classified, so they have to get their real property classified industrial, so they'll appeal the real property, get that classified industrial. That's usually where we see those kind of appeals. It's not usually the residential. We already talked about that appeals may be in person, by letter, by representative. I will say that if you're going to appeal it by representative, you just need to get a letter of authorization to a person. So if you do want to have somebody appeal on your behalf, just give them a letter of authorization. That's fine. Make sure when you do your petition, just don't forget to sign it, and don't forget to put what you think the value is. It doesn't have to be a perfect value. Just put something in there. Just all I'm trying to stress is make sure you fill out the whole petition. That's it. Just make sure all the lines are filled out. Don't leave anything blank. Decisions, the decision authority of the boards. Again, I just wanted to stress here that March board of review is the out of the 3 board of reviews, that's the one that deals with valuation. You can't appeal valuation to the July or December board of review. It's the March board of review. The next one is when you do, and they have no jurisdiction over taxes, millage rates, or taxable values when you're comparing taxable values. They really have no authority over those. It's really the assessment that they're looking at. Unless you did some additions or losses, those are value opinions. The opinion of value that the addition, like if you put a new deck on or you finished your basement, what's the contribution of the basement addition? That's a value opinion. So that you can, but not the taxable value calculation from a cap value point of view. They have no basis of authority on that. The decisions of the board of review usually come out pretty quick, and that's my last bullet on this slide is they usually do come out 2 to 3 weeks after the board review for most boards that I know. By statute, they don't have to come out until the first Monday in June. And maybe there's a board out there that does get them out there the first Monday in June. I can tell you the city of Novi, we get them out as soon as that board's done and we get our reports off to the county and our reports after the county 10 days after the hearings are done at the board review. We've got to get our reports to the county. Once those reports to the county, we start getting decisions out. The board's done, we start getting stuff out in the mail. So we tell people at the board that within 2 to 3 weeks, we're getting stuff out to people so they can start deciding whether they want to appeal to the tribunal. I don't know about other communities, but that's how we and some of the other ones I've talked to try to do it. July and December boards review. There is statute of when they do meet. I will just tell you, rather than trying to memorize statute, I would just call their assessor's office. They're already on their calendar because they've all produced their calendars. They know when they're going to meet. Just call the local assessor and find out when they're going to meet. These boards are held for very limited purposes. They're not valuation appeal purposes. They're things for qualified errors. There's 9 different things that could be a qualified error. There's errors of omission, errors of inclusion. There's things to correct ag exemptions. There's clerical errors related to uncappings for transfers of ownership. Clerical errors are things like typographical mistakes, transpositional error mistakes, measurement mistakes. So it's just routine mistakes that get made. Could be a clerical error. Mutual mistake of fact, where you and the assessor and a taxpayer get together and they actually determine something together as a mistake. Like I sat down with a taxpayer on a hotel and we looked at the plans and specs on a hotel that I put on a roll, and we actually had the square footage wrong, or we mutually agreed to how many rooms there were going to be in the hotel, and we miscounted. That would be something we mutually agreed to, and then we found out we were wrong. So mutual mistakes of fact are pretty rare. Principal residence exemptions, as I said before, those happen at July and December board of reviews. Also, personal property and corrections are done. A lot of those are done at July and December board review. But again, not valuation appeals. Not valuation appeals. You would have to get an executive order from the governor for that to extend. And that's only happened once in my whole career. And that was last year, and that's because the pandemic interfered with the March board review for a lot of the communities. So may that happen again? I don't know. But that's only happened once in my whole career. The last thing I want to touch on is the Tax Tribunal, and I kind of already talked about this a little bit. The Michigan Tax Tribunal is a state administrative agency which has exclusive jurisdiction on property valuation appeals. That's the highest tax court when it comes to property valuation. But it also hears appeals on special assessments, cigarette tax, use tax, income tax. It shares those type of appeals with the Court of Claims. It has 2 divisions, residential small claims division and the entire tribunal division. If you appeal your residential property after going to the March Board review, it's a pretty informal process. You'll have your case heard in the county the property is located at or an adjacent county. Most of the ones we have hearings at is held over at Oakland County Equalization in one of their offices. Rarely do we have them heard over in Lapeer County. Most of them are heard here in Oakland County. They're 30-minute hearings. Both sides get about 5 to 6 minutes to present their case. Get your decision back in about 3 weeks. You're heard by a hearing referee. It's not a real expensive process, doesn't have to be. The entire tribunal, though, is a formal process which most non-residential petitions go to. And for those, like I said, it's mostly commercial industrial, like your Lord & Taylor's, JCPenney's, Target. It's the bigger cases. Both sides usually get attorneys. Both sides get appraisers. There's always a court reporter. And they share in the cost of the court reporters. And those are regular hearings. The last thing I want to mention is even if you file with either of those divisions, you can always still talk to the assessor and try to resolve any of your disagreements with the assessor and come to a stipulation of valuation. So the assessors are usually always open to talking out issues. So if you had an issue that you thought there was obsolescence with the property because it's a 2-bedroom house in a 3-4 bedroom neighborhood, or you thought there was a noise nuisance because it's along a busy road in a neighborhood where you think your house is not being treated for any type of noise pollution, that other properties are more valuable for, or whatever the case may be, whatever you think you're not being considered for, you can still always talk to the assessor and always maybe come to a meeting of the minds and never end up at the tribunal, because a lot of cases are settled before they get. So the doors are usually always open with all the assessors that I know. And again, I don't know where everybody's from, but in my area and with the people that I know in this profession, most of them are pretty receptive to talking to the taxpayers in the community. With that said, I know I've covered a lot of material. I would like to turn over the presentation to Dan Tehan to address in greater depth the valuation information that's necessary from this point.
Thanks, Michael. And I am going to share a screen here of continue, I guess you can say, presentation. So give me a moment here. And here we go. And so hopefully everybody can see this. So yeah, my name's Dan Tehan, and as Jim mentioned earlier, I've been doing property tax appeals I've been selling real estate for 25 years. I've been doing property tax appeals for probably 15 to 18 years. And there was a period of time I sat on one of the board of reviews, got a lot of experience there. So what I want to do is help you understand that it's actually a very simple process. And I have enough experience to explain that many people complicate this process by providing far too much information, and it only serves to almost confuse the board versus help them, help you arrive at a better assessment. So the biggest thing that I think you have to do before you go into this process is understand what I'm appealing. And maybe that shouldn't be saying, what am I appealing? It should be saying, do I have a reason to appeal? What Michael just went through was explaining the process that the assessor goes through to arrive at a valuation on your property. The assessor is required by the state tax commission to assess every house, every parcel, every year. And so they have to do it with certain, he explained the different methodologies they use, mass appraisal and things. So the biggest thing, instead of, I get phone calls, and I've gotten them, notices have been coming out for 2 weeks, and I've been getting tons of phone calls so far to help people, or at least explain it. And the biggest thing I need to get across before you can go forward with whether you've got an action that you need to take is understanding your assessment. And that's what Michael was going over. So for me, I will ask somebody who picks up the phone and says, Dan, what should I do? This thing's it jumped significantly. I just bought the house. It doubled and things like that. And I always point out to them, let's first find out how the assessor is looking at you. So I start with recommending you get the valuation record or report that Michael just went over. And I like that versus the card, in the sense that it really summarizes everything. And if you spend a couple moments with the assessor, and each one's going to be different now with who's meeting live and who's meeting in by Zoom or just by telephone. But if you ask the assessor, now that I've got the report in front of me, can you spend 2 or 3 minutes explaining this to me? You're going to find that a good number of people will come away thinking, gee, I might not like how much I'm paying in taxes, but my taxes seem fair because they're looking at my property fairly. So the first thing is to understand how your valuation is based. But once we get to the point that we think that we are assessed at a value that exceeds 50% of the true cash value, the normal sales price of our home, if it were to sell or if it recently did sell, we want to find out, are we going to be appealing on the basis of, are there errors in our record that Michael just explained? And again, a real quick recap of that, you want to know, if for example, the square footage is off, or the bathroom count, or if the basement is not finished, or what have you. And then I recommend that you list those items out. And the next thing I would do, I'd bring them to the assessor. Now, right now, it's already the mid-February, so there might not be time to meet with the assessor beforehand, but you could be doing this anytime during the year. And then they will guide you to the appropriate board of review to make those corrections into the record, to bring those before the board. But the assessor, I have found, and I've been doing this a long time, I've never found an assessor not to be accessible and not to be generous enough with their time to help the petitioner gain a fair understanding. And if they do, if you do bring to them that there are potentially some errors in your record, okay, that they will then take actions to help remedy that. Now, my third bullet point there is that the assessor will likely want to verify those discrepancies. And so if they will want, most likely, to have some access to your home. And that's up to you as a homeowner, whether you're going to give them that access to your home. But in the interest of your getting your record corrected, that's the way that they're going to be able to verify it. Come out and remeasure the home. Come out and verify the number of bathrooms. Come out and verify that the basement's not finished, or whatever that discrepancy might be. So they do come in. I always joke with my clients is that if you're having the assessor come out to remove something or correct something in the record, they do come in with full peripheral vision. So you don't get to walk them through the fully finished basement that they don't have as a finished basement, and not expect it to show up as a finished basement so that you can show them that there is no tub or no shower in that basement bathroom. They do come in with peripheral vision. I have found that most assessors are not very punitive. They really want to get these right. And this is my take on it. This isn't Michael's. This isn't anybody else's. But I believe, and it's been my experience, that the more the assessors can get cooperation with homeowners and vice versa, they can bring these errors and these outliers that I call more toward the center. And the more accurate that assessments are, everybody benefits from that, because we're really divvying up a big pie and we're trying to get everybody their proper portion. So just know that they will come in and they'll verify that, because you have a right to have that record reflect what you really have in the home, but they have to be able to verify that's what it is. And then the other thing is the assessor may want to present this information. They may then send you the March Board of Review. They may send you to the July or the December board for any types of errors. Aside from that, most of the appeals that I hear about and that I help people with are the subjective value, the value appeals. And if you believe your home's assessment is higher than nearby comparable sales, then you would want to prepare an analysis and bring it before the March Board of Review. So when I use MBOR, that's March Board of Review. As Michael pointed out, if we don't take even the most minor action before the March Board of Review, and that would be a protective appeal that he referred to, a letter appeal with an application to preserve our right to go before the ultimate authority, if we have to, the Michigan Tax Tribunal. You've given up your opportunity for the year for a value appeal. There are people not knowing what they've got that every year they make a protective appeal. I think that's a bit excessive, but better safe than sorry. If you're not sure, you haven't had an opportunity to evaluate the data, then do a protective appeal with an application. The next thing you want to do, though, if you're going to do a subjective appeal, and here's where I get involved and people like me get involved, is you need to gather comparable sales data and analyze it and bring forward the most relevant cases to the most relevant sales to the assessor. And you do that by collecting data from sources like the municipal, the specific municipality. You can get it from places like realtor.com. You can get it from real estate agents. And I'm going to go into some warnings on some of that. And I am one of those real estate agents, but I want to help you get the right data. One thing, and Michael didn't mention this, is that all the years I've been doing this, I didn't encounter doing an appeal before Novi before last year. And so I was really pleasantly surprised, I guess you could say, when I went to their site to gather information for an appeal that I was going to do. And Novi has a fabulous dashboard in the way they display the data and the sales data. And I'm going to display one little piece of that in a moment. But you go there and you find out what sales they were using, and you can find out what economic neighborhood, Michael talked about that, what economic neighborhood you're in. I do recommend you would get comparables from within that neighborhood. But what you're going to do is you're going to collect some data. And then once you collect data, let's say you had a realtor find a bunch of comparable sales for you, you're going to verify that all that data is accurate and reflects what the assessor has. And I'm going to show you an example of that in a moment. And then I'm going to show you how to compile a summary. If there's anything to take away from this slide, 3 or 4 sales, if they're truly comparable sales, that's sufficient to mount a reasonable appeal. If you're going to go in there, I think Michael pointed out, you might have 5, 6, 7 minutes, to really talk. You might be asked some questions. You can't go over the 28 sales that happened in a neighborhood and explain that this one's got fresh paint and this one has new decking, and you'll never get your appeal across. You'll confuse them, and that's the surest way to get yourself denied, mostly because you didn't really present a great case. You just dumped a bunch of data in their lap and said, figure this out and lower my taxes. That's not going to work. Then you're going to present your summary to the Board of Review once you've put it together. So let's go on to the next slide. These are a couple of examples, and it doesn't matter that these might not be, it's small lettering and things. I'm just showing you a couple layouts. On the left side of your screen would be the black and white that shows a grid, and any of the municipalities that Oakland County's Equalization Department has been contracted by the local municipality to do the assessing for. This is the format that they put their sales study in. They have a map, and you can go online and you can be directed to this data from your local municipality. So for example, in the village of Milford, if you went to their site, it would direct you to Oakland County. You can get all this data for all the sales that were in Milford, the village of Milford. So you would go through and you would look at the sales, and you'll notice that in about the middle of that, there's something NBHD, neighborhood. That's the economic neighborhoods that Michael was talking about. And again, you would try to find comparable sales that were within the same economic neighborhood because they've got the most similar characteristics of location. And again, the first time you look at it, it could be a little bit confusing. I've never known an assessor, and Michael made the comment earlier, I've never known an assessor not to help a petitioner or a taxpayer, walk them through the data that they're looking at. If you look at the little green and white grid on the right, this is actually, I did a page dump from one of them on Michael's municipality. And so he breaks it down within that economic neighborhood and all the sales and the different pieces of information. And it tells you when it sold, what the price was, how big it was. And this is a good place to start either of these, depending on the community you're in, to see what is the pool of potential homes that I want to use to compare to mine. Now, this doesn't tell you which ones have been updated, which ones have got nicer quality finishes, which ones, this one doesn't lay out necessarily the bathroom counts and things of that nature. They do address land a little bit, 2-story, what kind of construction, when it was built. But for the most part, they really just get into a little bit of size and what the assessed values are. But it gives you a sense, at least when the sales took place. The next thing you'd want to do, you may want to do, is talk to your local realtor. Hang on, I did go to the rates. I'm going to jump. No, I'll do it this way. So this is selecting the right comparable data. So this was a property that sold in the village of Milford, and it's an actual property. Everything that you see on here is public information. And basically, this is what the one on the left is what you might get from a realtor that would say, hey, this is a sale. And you could do a search by, within a couple, 200, 300, 400 square feet of the size of your home. And you could say, I want only houses with 2.5 baths because I have 2.5 baths. And if you pick something that doesn't have 2.5 baths, you can adjust for that. But you're trying to find the most comparable. When we're finding the most comparable homes, we're trying to find things that truly are similar in condition, similar in amenities, similar in obviously the location and what have you. And you want to make sure that you're not intentionally avoiding things that are very similar to your house that maybe are assessed and sold for a lot more than your home, than you contest your home is worth. And here's why. When you go to the Board of Review, as if you're sitting with the assessor, they've got the whole pool of data. So they know what you're cherry picking. And I'm not saying that they're punitive. They're not. But they're also intelligent people that are putting their time into these boards to help you out and giving you the opportunity to come before them. So you really want to give a fair reflection of what is really similar. This is where a good real estate agent can come in handy with this process, because even when I'm dealing with boards of review, assessors, I did 2 tax tribunal cases earlier today where I was able to, in all honesty, explain to the party I was coming before that I have been in every one of the houses that I'm presenting as a comparable sale. And in the case of the tax tribunal cases earlier today, I said that all the comparables that the assessor was bringing to this case as comparables that weren't the same as my comparables, I've been in those homes too. And so I can bring true relevance to say, no, these really are quite comparable. Obviously, in a real estate listing, we talk about how lovely and charming and fabulous things are. And that's what they are in the eyes of the seller. But at the end of the day, they might be a little bit more worn and things like that. So we want to make sure that you're really picking things. And with Realtor.com, for example, you can get photos even after a sale has taken place. You can get photos and see some of them so that you're comparing. And by the way, with some of the tools that are available today that weren't available only 5 and 10 years ago, the assessor also is seeing more of that information. So when they have no finish in your basement and you're showing the walkout lower level with the pool table room and the theater room and the wine room, that gives them some clues that there might be some things that need to be reflected in your valuation. I use this display that's on the screen right now to show you that, for example, this property, and it's a little bit small to see, but the realtor has listed that as 1,830 square feet, this particular house over here. But they used as the source, not public record data, they just estimated the square footage. Well, they don't appraise and they don't assess based on estimates. If I go and find that same property here in this list on the right-hand side, I find that property instead was 1,689 square feet. Okay, so think about that. In the real estate listing here, it looks like it's more square feet. It's sold for the $310,000, but in reality, that makes a suggestion that it was lower per square foot. Then when you multiply that by your house, which is a little bit smaller, you say, well, gee, then my house should be worth 280, because if you multiply the price per square foot of this home times my home square footage, why, that comes out lower. But the assessor has their square footage in there at 1,689. So we really need to make sure what I do, and I do more appeals than anybody I know, I go through and I use my realtor tools to find what I think is comparable, because the pictures are very helpful and my knowledge of the market is very helpful. But then I go through and I verify with what the municipality has on all of those comparables I have, to make sure I'm speaking with the same language that they've already got confidence in, which is the data that they've compiled. Okay. Now, go back to what I said about 3 or 4 comparables being sufficient. Could you imagine having to go back and verify line item information on 28 comparables? You'll exhaust yourself. You'll confuse yourself. And if you're going to confuse and exhaust yourself, you're going to do that to the board in the time you have before them. So that's why I show these side by side, because if you look at this, the items in here, they may not be reflective of what the municipality has. You want consistency. Also, going to realtor data, some of the tools that I use and some of the other realtors that friends that you may have that are available to you, they can run things what we call CMA reports. And this helps break down within certain criteria, within certain locations. They can help break down or show return sales that happened within a sales period. Michael pointed out that the 2-year sales cycle for 2021, which is December 31st, 2020, is the tax date. That was a data pool from April 1st, 2018 that ended March 31st, 2020. And then they will continue displaying data that comes for the rest of the year. So you might want to use those as comparables, as he said. So I would do a data search that was for that population of time. And then when I do that population of time, I'm able to find things that have similar square footages. I go with a range of 400 to 500 square feet at the most, and the closer to my square footage, the better, to make my point. The fewer adjustments you make to a truly comparable home, the more realistic it is that it's a comparable home versus something. I was in one today and it was a big expensive house, but just because the guy couldn't make it work, he made an adjustment for $400,000, which happened to be 1/3 of the value of the comparable over the price of the house I was arguing about. So you really want to get them as close as possible. This report on my left shows me the acreages. The lot size makes a big difference. It'll also list, some of them are going to have, more baths, less baths. Bedrooms isn't something that normally is an adjustable thing. So I don't see assessors get too hung up on bedrooms, except if in a neighborhood with a bunch of 3 and 4 bedroom homes, a 1-bedroom home might have some functional obsolescence that could be very difficult to sell. So those things can play into it. But on the right, I've also showed you, see how these comparables, if my subject property is toward the middle of this, all of these are within a mile of each other, actually a half mile of one another. Obviously, location is going to be very similar. Some of the communities that are chiming or that are joining us tonight, some of some of you are from communities that could be long and narrow, and they could be 8 and 10 miles wide or long. Properties typically at opposite ends of large swaths like that aren't going to have similarities in land values. They could, but they really aren't going to be the most similar. I'm going to go over 2 more slides. I'm trying to keep this simple. And I'm going to provide to Jim, and if people want to get it from Jim, I will provide a layout for you. But this is this is not the only way to lay out your data, but this is a format that I've been using for the better part of 15 years. I do it in a spreadsheet. You can see I've color coded it for discussion purposes, so you can go back and re-reference this should you want. But we start with, in the orange top area, we identify what the property is, the subject property. I list what the assessed value is. I put what the land size is, usually in acreage, 0.1 acre, half acre, 6 acres, whatever it be. And if it's a property that is sold in the last year or two, I put the actual sales price and the date of that sale up there. And then I point out what the city's true cash value, that's what the per city is, the true cash value. I then list what the square footage of the property is. I list the year that it was built. I list what the basement is. Does it have a basement? Is it finished? Is it unfinished? Is it a walkout basement? And then there's something called class. And on the valuation record that Michael pointed out earlier, there's something called class because all properties are classed, whether they're class A, which would be a high-end custom home with a lot of premium finishes to it. And then B's would be a little bit more average. C's would be lower-end building components and simpler builds. And then there are D's, which are really toward the very bottom there. There aren't EFs and G's. But anyways, I put what those classes are because it does help to show the assessor or the board of your review that when I'm bringing these properties to you, I'm bringing properties that are either all the same class, so that again gives them confidence I'm pulling good comps, or if it's not the same class, I might be arguing that they ought to be. Okay. I list the number of bathrooms, halves and fulls. I list the number of, is it an attached garage? Is it 1 car, 2 car, 3 car? Does it have decks, patios, enclosed porches? At the end, I then put what is the price per square foot that the assessor is saying based on its true cash value that they're assigning to my property. I do want to point out in the yellow section right here, the yellow section is where I would list some unique or special amenities. Hey, this one has a swimming pool. Another one has a different amenity. This one has an extra, and I make adjustments for it. It's only got 1 full bath versus 2, and I put dollar adjustments in there. If I use a comparable sale from 2 years ago that's in the sales study, I will bring it forward with appreciation factors to December 31st of the year that I'm appealing. So in this case, this year, a 2018 sale, I would bring that price of that sale forward a couple of years to make it a 2020 sale. We're trying to get it as of tax date. Simple enough there. I then move on to the blue area and I list, in this case, 3 comparable sales. I only highlighted the first of the comparable sales, but I put the same information for all of the comparable sales that I just did for the subject. I want to present it the same way. The sale price, when it's sold, I do want to show what the assessed value is. I want to show what the land is, how big it is, the year it was built, is it a finished basement? Does it have a basement? What is the class, etc. If I'm going to make any line item adjustments, we always adjust the comparable to the subject. So for example, if I have a house that I'm showing and I'm saying it's 300 square feet larger than the property, than my property, I have to subtract a value from that comparable to bring it in line with what my property is worth. Conversely, if I have a smaller property I'm comparing to mine and it's sold for a value, I would have to add value in this yellow area to say that it's got more value to it because it was smaller to make it comparable to mine. And we make those adjustments. It's similar to the way an appraiser would do it when you get a mortgage and they appraise the property. We don't go to as many line items, but we're trying to pick up some of the big ones. And we do that for the 3 comparables. And for me, since I try to pick properties that are always going to be very similar in location, very similar in land size, and if I don't have same land size, then I make adjustments for it in the yellow area. I then come up with, what does this now suggest the price per square feet would be of all the comparables? And then I apply that to the square footage of the property that I'm presenting. And when I do that, it gives me reasonable market reflection of what I'm suggesting my property is worth. This is not the only way to do it. This is the way I've been successful doing it, and I've done it, going into this year, just in the last 5 years alone, I'm at about 190 some cases. And we usually win those cases because we lay it out simply. We don't lie to the board of review. We don't lie to the assessors. We present true data, and we are prepared to defend it. And it usually goes pretty well. In the yellow section, or I'm sorry, in the red section down below, I write notes. I will point out that, listen, all of these comparables in the subject are from the same economic neighborhood. The comparable number one was totally renovated in 2019, and the subject is not been renovated since 1974. So that's why I made an adjustment. And I just kind of put some notes as to why I did what and why I selected what I selected. Very simply, if there's some characteristic of the subject home is going through a renovation, and it will be completed in 2022, and then it would reflect some of the things that you may already have on it, but they're dilapidated now and they should be further depreciated. I make my argument there. And then at the very bottom, I go with in the green section there, I put down there, based on all of this, this is what this analysis is telling me. And then the very bottom line says, and this is what I'm requesting you do. And you see that I put two items there. I'm requesting, in this case, the 2020 true cash value, that's what TCV is, true cash value be a specific amount and a new SEV of half of that amount. As Michael pointed out a while ago, is that I'm arguing, and my appeal is based on the SEV. But if my successful appeal brings my SEV down to and subsequently below my taxable value, then the taxable value goes down to the SEV. So this is my simple format. I'm going to show you a completed form. So this is that exact same screen without the color coding that was filled out. This was brought to a board of review last March, and laid out a few things there, real simple. It was concise. I explained, that the buyer paid $21,000 over asking price when they bought it because it was a competitive sale, and he waived some of the appraisal. The appraisal did come in at $300,000. They paid $321,000. I point out that they overpaid for it. I also point out that they're all from the same economic neighborhood, which was easy to find on the map that Michael's municipality provided. It's an interactive map. Nobody's are better. And I think that the senator ought to be recommending that the county and other state area municipalities look at them and try to pattern that, because the access of information was very, very, very good. And then I point out what I did to the various comparables. The subject is nicely finished lower level, as does comparable number 3. 1 and 2, we added more value to those sales because they weren't as nice finished basements. And we just go through that. We made a request for a new SEV of $310,580, a new taxable value, a new true cash value of, this is going live, new true cash value of $310,580 and a new SEV of $155,290. And I can tell you that 2.5 to 3 weeks after we met with the board of review, we got a notice that said your property assessment has been changed, and it reflected exactly that. I ran through it quickly. It's a lot to take, but it's a very simple process. And this is the format I use. And that's all I have on this. So at that, I think we're throwing it back to you, Senator. And I guess there's going to be some questions that you're going to take.
Thank you, Dan and Mike. It was very informative. We do have some questions. However, people have busy lives, so we have to keep very short answers to these questions. So I'm going to read off the questions, and we'll get through as many as we can, but keep very, very succinct answers to these.
Sure.
The first one is from Shannon, and she writes, I was told that if you don't contest tax increases the first year your home is bought, then there's no point in fighting it. Is it true?
Well, I'll take a stab at this first one. I'm not really sure why she was told that. I think if anytime your property is overvalued, you should try to seek trying to get it properly valued. Because if it's overvalued and she keeps letting it go, it's just going to compound, getting greater and greater overvalued. So if it's 10% overvalued, the next year that 10% is just going to be compounded with another inflation rate multiplier overvalued and another increase in market conditions overvalued. So anytime your property is overvalued, I would bring it to the attention and try to get it adjusted back to where it should be valued properly.
Makes
So
sense.
whether she lets it go the first year or the second year, she needs to bring it to the attention of the assessor, and if she has to, go to the board review.
Sounds good. Next is from Tricia. Does it cost anything to appeal your property tax with the county?
I do those. Let me answer that one. Let me answer that one, Michael. You know, if you do it by yourself, it does not cost anything. And you're not doing it by the county. You're really doing it at the local municipality. Now, we did point out earlier, Oakland County provides assessing services for, I think, 30 some municipalities in Oakland County, but it doesn't cost anything to do it. If you bring outside parties in to assist you, they're going to charge you to do that. But first determining what you need to appeal, you'll make that determination. Is it worth it to do it on your own? And many appeals, the majority of the appeals that go before these boards are done by property owners, and they can successfully do it if they organize properly.
Perfect. Next, we have Stephen. Is there a website I can check what square footage I'm paying for property tax purposes for my condo?
Well, most of the assessors have the valuation records on their individual website. So I would go to your local assessor's website first. And if it's not there, go call your assessor, because the condominium's square footage is in their master deed. So you could probably call your assessor second and ask what the square footage is they're using for their square footage calculation.
The next one is Dave, and it's to me, Senator Runestad. What can we do to make things more taxpayer friendly? That's a great question, because my staff and I have been working on a number of reforms. I don't want to take the time to go through those right now, but we definitely are going to be making that a high priority over the next 2 years of the session. Next, we have Stephanie and Chris. If I'm planning to buy a house next year, is there anything I can do to prevent a bad assessment?
Well, yeah, I would like to answer that one. First of all, the term bad assessment, let's reverse that. What we're looking for is to make sure that we're getting a fair assessment. And I think that Michael from his seat and me from my seat, we both want that. So the first thing you want to do when you're buying properties and looking at properties, well, with a real estate agent in particular, you want to ask, what is that SEV at the time I'm looking? And you're really inheriting that SEV plus the influence of one more year, whether it be up or down. So, and Michael covered that in his discussion. I would point out that more often than not, when I get a phone call that somebody sees a huge jump in their taxes the year after they bought, it's not that the assessor went through and reassessed and picked up, something that was outlandish. Most of it was already on the property, already baked into the assessment. It was the difference between the taxable that Michael explained, the taxable and the SEV. So look at those true SEVs and you'll have a very good indication of what that assessment's going to be the following year within a few percent.
Thank you. The next two are from Catherine and RJ, and I think these are two individuals, but I think the question is the same, or the answer is going to be the same. Catherine says, my taxes almost doubled from last year after I bought my house. Is this fair? And RJ wrote, I bought my house from my parents and my taxes went way up. What happened? Both of these cases, my presumption is it was the uncapping of the property tax that the seller had the home for a significant period of time. Thus, because of the limitation to rate of inflation, their property tax did not go up when they purchased it uncapped and went to the higher level. Is that accurate, what I conveyed, or is there anything I'm missing?
No, that's good.
Senator, the one thing that we should add to that is in the second one that they said they bought the property from a parent, if I'm correct. Was that
Yes.
the second? So
Yep.
in that end of it, because we didn't really cover this today, when there is a sale, bloodline sale of a property, there are certain exemptions where the property would not become uncapped. And those exemptions, again, I would talk to the assessor and they can help you. There's forms for those things. And there's certain types of things and whether they're lateral bloodline or up and down bloodline, but there are exemptions. So there might be a circumstance there where there might have been an improper uncapping that they might be able to put back in order.
Very
Yeah,
good.
there's an affinity by blood relationship that if you sell it to a son or to a child, that they can keep the property capped. So they should talk to their assessor and maybe they can go back and get it corrected now.
Very good. Well, we'll get in touch with RJ and see if we can clarify that, and then make sure that he or she, I'm not sure which it is, gets the information. Next is from Michael. We moved out of our home 6 months to renovate, and my taxes went up a lot. Does this make sense?
We didn't touch on this either, but there is a thing called non-consideration for normal repairs exemption. And one thing we can bring up, and it's too late for was it RJ? But when people buy fixer-uppers, if they're normal repair items, sometimes they can get an exemption for those items. It's commonly referred to as Matthew gas. People buy these properties that are in really despair. So they gut the properties and they put in like new furnaces, new kitchen cabinets, new windows, new floor treatments. Those items, as long as it's under the current ownership and stays under that ownership, they certainly increase the property's value, but they stay off the assessment roll till the property changes. It has to be replacement items. So it's not that they're putting in items of new character, so it has windows and it has kitchen cabinets already, but they're really in bad shape, so they're replacing them. So they have the assessor come out and do a before and after before the work is done, and then they see that it hasn't been done yet. So it's non-consideration for normal repairs is what the application is called. And it keeps it off the assessment roll till the property sells. So before somebody does the work to a property in needed duress that needs the repair items, they ought to talk to the assessors, because there is properties that may meet that exemption claim. And we had one in Auburn Hills before I left, and they took advantage of it for, at least 15 or 20 years where those items stayed off the roll.
Senator, let me add one more thing to that, is that I heard you say that they said they moved out for 6 months or something like that. One of the things is, principal resident exemptions are only allowed on a property that is your primary residence, and it's got to be, your primary habitable residence. So it's not uncommon for a municipality to say, well, gee, you've got all these permits, you don't have running water to your house, you've cut off the utilities while this extensive renovation is going on. And so they can rescind and remove the principal residence exemption on that property. And then after you've moved back into the property, you've now taken it back as your habitable principal residence. At that point, you have to reestablish that for your property. The municipality doesn't automatically do that for you. So just last year, it's funny that question was asked, just that last year, we did one for somebody. They had missed 3 tax cycles, a winter, summer, winter, wondering why they had gone up so crazy. We were able to go ahead and make an application, and those were refunded to them. And it was the PRE was retroactively, you can go back 3 years, put on the property. So that might be what they were referring to. So there's these 2 different avenues. But again, when you're talking to the assessor, they'll filter out these questions and they'll get to the root cause of why that might have happened and help you out, I believe.
Sounds good. Next one is Carunya. Carunya writes, how am I impacted by new homes being built next to my older home?
You want to do that one, Dale?
Well, I would just say that, remember, there's, homes have to have comparability. So when new homes go next to yours, it may be signaling, big increases in your land values, and it may be, signaling a different, a changing makeup of the neighborhood as far as the inventory of homes. Just make sure the assessor should be recognizing them, because new homes are going to have zero depreciation once they start. And my home's been there for 30 years. It's going to have a significant amount of depreciation. So those are reflected in your tax records, but it's important to know that the new constructions may have some future influence on land values in a neighborhood, because now they may be coming a bunch of tear downs, for example, or lot splits or things like that. So that's what you're looking for. And when you see activity in your neighborhood like that, I definitely recommend get your valuation record on a year-to-year basis and just keep tracking it. That's all you need to do. It's not that hard.
Thanks. Next is from Linda. Do I have to appear in person at the Board of Review?
Yeah, I think we already talked about that. You don't. You can do a letter of appeal. Just I'd make sure you file the petition properly and get a receipt just to protect your own interests.
Sounds good. Next is from Terry. I still don't understand what a clerical error is in regard to your July and December boards of review. What is that again?
Again, a clerical error is just mistakes happen. It could be a typographical mistake. It could be a transpositional mistake. Could be a mathematical mistake. Because we recognize that we're humans that are inputting things in the computer, we've provided for a way for us to correct those things in July and December, because we as assessors can't do it ourselves. We have to have this body of people at the board of review make those corrections for us. So we bring those mistakes to the board, and they provide the order that allows us to do that.
Thank you. The next one is from Arjun. And this is kind of similar. I don't understand what you mean by mutual mistake of fact. Can you tell me what it is in simple layman's terms?
Yeah, that's a little easier to explain, but it's pretty rare that it happens. It's basically when we put something on the assessment roll, the assessor and the taxpayer came together and made the mistake together mutually. So a good example of that is I may have an apartment developer come to the city. We sit down together and we look at the apartment project before they construct it, and he tells me he's got 124 units going into this apartment. We do an income approach on it, and that's how I'm going to put it on the assessment roll. And we make collectively a mistake, and it's actually 125 units or 120 units. And then next year we find out we were off the count by 2 or 3 units. I can actually take that to the board of review because we mutually made that mistake together. It's where the assessor and the taxpayer shared in the mistake together. It's a pretty rare occurrence when that occurs, but it's a mutual mistake that was owned by the assessor and the taxpayer together.
And Senator, I can tell you, I just did one in Beverly Hills where that did happen. The petitioner, they went ahead and submitted their plans, and as cost overruns happened on their new build house, they decided not to complete the 600 and some odd square feet over the garage, and the assessor hadn't been in yet, and so it showed up on the assessment rolls because that's how it was planned. And then they got together, they walked through, they laughed about it, they went, and at the next board they made that correction because what they mutually led each other to the same conclusion that wasn't the right conclusion.
Sounds good. Next is from Dave. You mentioned principal resident exemption. What is that?
You want me to answer that, Dan?
Yeah, go ahead.
Okay, I talked a little bit about this earlier. It's a huge exemption. I mean, you can get exempt up to 18 millage rates of school operating tax. You have to own and occupy the property as your primary residence. So, and it's a big tax relief for the resident. So just make sure when you get your assessment notice that you're actually, if you're eligible for that 18 mils reduction, make sure that you're actually qualifying for it. And you're actually receiving it. Because if that is you're owning and occupying that property, we used to call it the homestead, and we changed the name a number of years ago to principal residence. So it's up to 18 mils. So if you have a taxable value of $100,000, that's $1,800 of a tax savings you're missing out on if you're not claiming that 100% principal residence exemption. So it's a huge savings.
Sounds good. Next is from Esther. You mentioned poverty exemptions. What are those?
Poverty exemptions, again, is another way for somebody to get help when they're going through some kind of hardship or they're on a fixed income that's below federal and local guidelines. So it's granted by the Board of Review. You can either get it at your March, July, or December Board of Review. The persons have to meet both federal and the local adopted community guidelines. And it's really for somebody that's in a financial hardship position. You'll have to present both your income and expenses to the community and make sure you're meeting those, but you can be granted up to 25, 50, or 100% tax relief from property taxes. So if you are in a financial hardship position, that is something to look at your local community for to see if you qualify. And it is something, unlike the principal residence exemption, you do have to apply for every year to one of the three boards.
I think we just passed a law that changed that during the pandemic, that if you meet certain requirements of age and poverty, that you may not have to apply for, I think it's 3 years if you meet those requirements. The next one is also from Esther. Does the assessor have the right to come into my home?
No, I'll answer that one because I'm kind of passionate about that. No, they don't have a right to go into your property, nor do they have a right to harass the owner because the owner refuses that access to the property. There's a lot of ways to gain information about a property other than going into a property. And we respect owners that are leery of people going into their properties. So no, you don't have to give them access to the property. There's certain other ways they can get information about those properties and estimate how that property is finished off. We actually put on a video last year because of the pandemic that because of the safety issues that we weren't sending people out to do any kind of interior inspection. Right. And if people wanted to send in appraisals or surveys or pictures, they were more than happy to send that in. We've got pictometry and everything else here to help us. So I feel when people say that they want to maintain their privacy, I understand that completely. No, that's your private property. So if you want to maintain that privilege and those rights, I understand that completely.
I would agree with that. We have a lot more questions, but we had a time limitation, so I'm going to have to make this the last one. This is from David. What do you mean by qualified error?
Qualified error gets real technical. Again, there's a lot of things you do at July and December board to correct errors in the assessment record. An error could be an error of omission because there's things that we didn't know that the property has that we don't know about, like omitted decks, property that actually exists on the parcel that we didn't know about, basement finishes we didn't know about, or property that we included that on other parcels that should be there. Like we put a pole barn on a parcel that should have been on the neighbor's parcel. So it's ways of correcting property records that we don't have a way of correcting ourselves because the assessment role is done, but we have to go through the board review for it. Some of those we can take back more than just the current year. Some we can go back 2 years if we're really sure about it, like omitted property claims. There's uncapping issues. When there's a transfer of ownership and we've incorrectly uncapped certain properties, we can go back. But there's a litany of things that we could actually do as qualified errors that go beyond this Zoom conference call tonight. What I would say is if you find any discrepancy in your records at all, talk to the assessor and it may qualify for one of these 9 different types of qualified errors. But there's quite a few different types of qualified errors out there, just like there are clerical errors. Like PREs, there's agricultural exemption, qualified errors, PRE. I mean, there's a lot of different types of qualified errors. Errors of measurements, matches one of the qualified errors out there. We might have you down for 1,200 square feet and it's actually 1,100 square feet. There's a litany of different types of qualified errors that probably I could go on for probably 15 minutes talking about just in an elevator approach.
And Senator, and I'd just like to add to that, from my perspective, because I'm not an assessor for any municipality, but I deal with them on a weekly basis, is that, the assessor has so much knowledge, and it has been my experience over all these years that they do have a true desire. And I don't always agree, and they don't always agree with me, but they do have a true desire to get these things accurate. And there's not a little list or ledger that they keep that says, oh, this person's calling me, we're going to have to go do something to their property. A lot of people are apprehensive from calling the assessor and asking a question. And I've never not had a question answered. I've never felt a vindictiveness. And I would say use them as a resource to help you understand how they're looking at you. That's the way I always put that.
Sounds good. Well, I so appreciate the time of both of you, Dan and Mike. And we had a lot of questions that didn't get answered. They're still coming in. We are going to make sure and get to you to help us respond back to these people so that anyone who did get in touch with us is going to get their questions answered. And we couldn't be more pleased with how the program has went. And we'll probably do something like this again next year. But thank you again so much for participating and being a part of this. And we'll be getting back the answers and getting back to both you. Thank you again.